This 20-minute gap is by far the most important time in the market, and it controls every single move. And in today, I'll be showing you guys how to trade the hourly macro sweep, which is our macro range theory. This is a new concept that I've done in-depth research into, and I'm sharing it with you guys today so you guys can not only enhance your trading, but also bring more clarity in terms of where you want to be entering positions, because these are the best times to enter for every single hour. Now, what you will learn in this short course is how to recognize the hourly macro sweeps before and after the hour, the two types of macros, including your range and distributive types, how to identify the macro sweeps with your macro range theory, as well as the exact 20-minute windows that the market decides to move in. Then we'll delve into how to find high probability entry zones using volumetric info. And then last, I'll show you how to enhance your entries with the macros and avoid fakeouts. And then we'll finally solidify all of this with live chart examples and trades that we took this week in the Nova Legacy live streams, and as well as some more data behind the strategy and why it works, plus a bonus of our Nova Legacy blueprint for mastery, which is going to be somewhere in this video. It's free and you guys can access it today. Now, with all that said, enjoy this full comprehensive lesson. First prerequisites to get the fundamentals of this video, you're going to have to understand the daily time frame, previous day high and low strategy, as well as our 4-hour candle close strategy to fully understand how we're going to be using the macro sweep. I won't really go into them today, but as I said, I'll be linking them within the cards above this video. Now, what are our hourly macros? Firstly, these are the 10 minutes before the start of the hour and the 10 minutes right after. And these are highly considered as your hourly macro liquidity sweeps. Now, there's often a liquidity sweep just before the start of the new candle forms. So price is sweeping out any of that garbage from the previous session, and it's now loading on new orders for the start of the next new hour. This is why the market is going to have this 20-minute transition phase. Now, the 10 minutes before, it starts from your example 8:50 to 8:59, and this would be an example of a 9 o'clock hour. And now the 10 minutes after would be from 9 o'clock to 9:10. As you can see, it's a 20-minute gap that transitions from the previous hour into the next hour. And you can start to realize how important this is for offloading and unloading newer orders, newer contracts, and more volume into the market. And today I'll be showing you guys, as I said, how to truly piece your way and take advantage of this loop hole in the market. Now, with that, just understand that with the 10 minutes before, price is usually looking to create liquidity pools that will later target in the new hour. And in the 10 minutes right after, this when price is sweeping out that liquidity and then looking to grab different draws on liquidity with a very strong reaction. Now, here's some examples of how you would want to identify each macro. So if you're starting with the 2 o'clock session, start of the hour, realize that before that, 1:50 is the 10 minutes before and 2:10 is the 10 minutes right after. And for 8 a.m., it's going to be 7:50 to 8:10. And then for 10 a.m., which is my personal session, that is going to be from 9:50 to 10:10. And once again, this can be extended within your New York PM sessions. Now, the London session does have a variation of how long it macro spans for. So for the one that we're using today in this video, the London macros actually span for about 20 to 33 minutes, okay? Just keep that in mind. Remember that I'll show you guys how to piece together all this knowledge and easily transition it into your system. Now, these are the two types of macros that you guys have to focus on. We have our range types and our distributive types. Now, with the distributive types, these can also be split up once again to either be continuative or reversal. Now, let's delve into this. So our range types are, within the name, quite simply just accumulation phases within the start of a new session. Now, these happen just like how you started in London and just like how you started New Open, price will look to accumulate. However, once price is moving in this sideways action, creating a range and building up liquidity on both the high and the low of the macro, think of it like the market is just setting up a trap before we start the hour. You're not really looking to enter around within this area, okay? After price is done with this buildup, there's often a major move that is stalked by a reversal, where now price is looking to target those range highs and lows. Now, an example of this is our New York AM macro, which starts from 850 to 910. And as you can see, it's very close to New York open. So this is two examples of our macro sweeps in play on London. So with the start of London session, this is your first London macro. And as you can see, it formed as a range type macro. What does that specifically mean? Price came and swept out the top of the range, and then it reversed to the bottom of the range. Now I can see it's very similar to how I speak of our candle range theory in our one candle day mechanics, where we focus on that previous candle's high and low, using them as pivot points. If price takes out a high, we're looking for price to pivot and trade towards the lows. And once again, if price takes out the lows, we're looking for price to pivot back up towards the highs. And you can see how beautifully this plays out, especially in your New York AM session 1, where price is just starting off with that accumulation phase. You gain that sweep and then you can trade that reversal. Once again, I'm going to show you guys how to even use these as entry triggers, and not only that, but bring more confidence to all your setups. Now, our distributive types, these occur after the session has started and the market has already chosen a direction. Now, keep in mind, the first macro and second macro play off of each other. If the first macro starts off a bullish move in a continuative distributive macro, price will look to continue that bullish move expansively. And once again, the opposing could be said. If you see that your first range is a reversal and price starts to go to the downside, you can expect for your continuative distributive type to be a extremely aggressive and volatile move to continue that move to the downside. Now, you could have the opposing being played out where price is now using the distributive macro as a means to play off of higher time frame PD arrays. So this could be hourly fair value gaps or daily fair value gaps. Now price reaches the zone and will look to reverse with much volatility. So usually your distributive type is where you're looking to enter your trades just because that spike in volume. Now, an example of this is going to be your London 2, as I said, the second macro of London session. And once again, it's driving a brand new impulse into the market. Now, firstly, before I continue, I do want to make mention that everything I'm teaching you guys today has already been discussed extensively within the Nova Legacy Discord. And if you guys want more exclusive knowledge and seeing this being played out every single morning in the market, you can join our Discord, join the community, join the live stream. You get to see me trade this live every single morning, and you get my bias and you get my understanding on the market. Okay. Lastly, also with this, if you guys join today, you'll get access to not only that, but also gain authority to our trading clarity toolkit, which is my entire trading playbook with all my setups with detailed explanations, as well as my enhanced trading journal, which will be monitored by all your Nova coaches. So you avoid those costly mistakes that you keep on repeating. And then once again, if you want to go at a self-paced movement, you can just get our Nova Clarity checklist, which will be in the first link in the description, as well as our 5 steps to becoming a profitable trader, which outlines how the market moves, zones to enter at, our candle, range and impulse theory, as well as the iron mindset trading psychology, all for free in the first link in the description. Now, let's go over our distributive reversal macro. Now, as you can see, this is a beautiful chart layout here, but let's quickly dissect it. Now, our London one, that is the first macro of London session. What happens? This is used as a beautiful accumulation range type macro. What does price do right after that macro ends? It uses it as a means to come towards the highs, pivot and reverse. That is your first trade entry of the day, and then you're targeting low. Now, if you miss on that potential move, or you want to just focus on entering in the London macro, in the second London macro, which has a much more volatility, you have to look at what are your external zones that price could play into. So in this example, we did have price play into this PD array that was perfectly placed over here. And as well, there was a bit of SMT going on within this one area. So Once again, price comes to this order block, and as you saw the new macro, look what happens. Price makes a dip into it, and then you just see a massive movement to the upside, targeting a common drawn liquidity. Once again, this is your reversal type. Why? Because your London macro, the first one played off a bearish move. However, the second macro plays off a bullish move. Now, once again, this is only used when you have a very high probable PD array that is in alignment. And once again, I'm not going to leave you guys with just a random description of that. I'm going to show you guys how to identify this specifically using volumetric info so you understand the reliability of each and every single zone. Now, this is an example of a continuation macro. Once again, this is of the distributive type. So what happens? We start New York session with a ranging type macro. Price sweeps the high and then comes towards the lows. Lovely. Now, what you can start to use the second macro as, you can use it to scale into positions or get another re-entry. Because as you can see, price makes a retrace, but as soon as that macro starts, we have a immediate movement to the downside, continuing that bearish action that was placed from this reversal. Once again, I'll show you guys the exact zones to understand the exact volume at these different areas, okay? Now, let's try a little exercise. You can quickly pause the video right now to get a bit more time, but I want you guys to identify the different macro sweeps that are being displayed on this chart. Okay, wonderful. So if you're able to identify the macro sweep at your AM2 where price came towards the high and then distributed lower, that would have been your first point. Then we have another one in the third hour of New York session. Now this is around 11 o'clock, okay? Yet again, another macro. We have NY lunch, yet again, another macro. And then we have the New York PM session, once again, another macro. Now I'm showing you guys this because when I show you guys candle range theory, yes, it is good for your one candle day mechanics, but I do understand the situation for a lot of my viewers that you guys are usually going to be at work. So you don't really have the time to trade the New York PM session, or you don't have time to trade the New York at all. So you go over to London. This is my means to help you guys to adapt your system so it fits your schedule. As you can see, even if you didn't trade the AM session of New York, you had an opportunity during NY lunch and as well as the NY PM session. And we also went over other examples. We used the London session macros to still get positions. Once again, this is an easy transition because I've already given you guys the base understanding of candle range theory. So now you can apply this to your macro sweeps. So this is an example that we took. During one of the live streams with our CRT with macro range theory being in play. Price took out our candle range high as we normally understand. Once this happens, we are targeting the candle range low. Simple principles. However, we now have an extra confidence as price also swept our New York AM1 macro. Took out that high and then came aggressively towards the lows. Now, just by seeing this, I wasn't just targeting my CRT low. I looked to even target beyond that because I just understood the volatility that kicked in right after that 20-minute gap. Remember, this transition phase is the main ignition for price action, okay? Now, here's another variation. We have London 1 accumulative type. It creates that range sweep, and then now price is looking to return to this. So you have to understand that even though we're all the way within this higher time frame P array, also understand that this lower time frame London macro should be your drawn liquidity, your immediate drawn liquidity, because as you can see, price then impulses down, creates a change in state delivery, and then rebalances at this order block. Once you see that, we're looking to enter that trade and then target the London low. Once again, using not only candle range theory, but only using our macro range theory. And then once again, you can see there was another position that did outline itself during the New York AM session where price came and then made a major distribution lower. Now, obviously from this, once we create that CRT sweep, we also then start to distribute back up towards the highs. But my question to you guys is, what other sweeps are also being played within this specific scenario? Because there are a few more. Once again, if you guys correctly identified, we had another sweep happening right at this low. As you can see, once price finally hit our TP and came to the drawn liquidity, it then swept this point and then went to the opposing side of this London macro, right? As you can see right there, it comes inches towards it and then plays into that zone. Once again, you want to be using these as your tedious reversal that the market wants to play out. And that was a bit more advanced, but let's go over something more simple. This beautiful example here, a reversal day, and we had our CRT high, here's our CRT low. And as you can see, as I was entering this trade, I was looking at specifically my New York AM1 macro. What does price do? It not only sweeps my CRT, but also sweeps my macro range low. It then comes to the range high. And now I'm not just using this as my drawn liquidity, because yes, I could have gotten an early entry out of here, but I wanted to be a bit more cautious on this day. So what I did, I used my macro as a change in state of delivery, meaning that once price closes above the zone, I'm not looking to enter my trade because I know that there's a higher probability for price to have a continuative second macro to follow the movement to the upside. Now, once again, this is still a very new concept to you guys, but I'm guaranteeing you, when I show you guys the exact indicator to plot all these zones onto your chart, you will start to see and interact with this setup a lot more and get a lot more coherence with it, where you'll be able to form your bias just around the macros alone. And then yes, there was also another very good SMT that just added to the setup here, okay? But this is a very good setup, targeting the CRT high, but we looked for a bit more because we had our macro to ignite this trade. Now, once again, this is another example. As you can see, I also want to point out something that if you miss your first initial entry, don't try and FOMO in, because remember, these macros form at the start of every single hour. They are a transition phase, and you can look for these sweeps on each and every single hour. So for instance, if we miss this first macro entry, the third macro of New York session, which is at 11 o'clock, gives another opportunity. Why? Because price comes and sweeps the lows, and now we have a beautiful change in state of delivery as price breaks above the high over there, and then you can look to scale in or just re-enter into the position right over here, and then obviously your stop loss is below the macro right over here. Also, look at this. We have the NY lunch giving us that ignition, that volatility. Once again, you're looking to use the macros to form out your bias, and you're looking to use them for entries, okay? Now, before we lastly end off here with this, I'm going to give you guys one more example to truly test out all the knowledge that you learned today. So I know you guys are applying this correctly in the market and not just using it as another strategy to hop onto. So identify the macro sweeps that you guys can see right over here. Once again, pause the video if you want to get more time. Okay, lovely. So first, here was the first initial macro. Why? We did have our range high being swept here, and then we had the range low being taken out, had the London macro taken out here with another micro macro also being taken out. And then lastly, we had our New York macro where price then reversed from there. Now let's go over a few more chart examples we took this week before we fully end off. Now, once again, just to help you guys understand, I'm not trying to give you guys just hindsight knowledge. These are trades that we took within our live stream. As you can see, I sent out my entries, and also I sent out my exact points, TP, everything, and I'm fully transparent with my group, as well as I send out my daily outlooks on what I look to see for the day, especially. Okay, now that that's out the way, once again, you want access, first link in the description right after you finish watching this video. So here you go. For all the patient traders, I'm giving you guys the exact indicator I use for this. It is my macros, ICT kills on Trading Finder, time and price by TF Labs. That is the exact indicator I'm using to mark out all my macros. And these are the exact settings that I have. It is default, but I make sure to set this to UTC-4 to accommodate for daylight savings in New York. Once again, also my chart is set to UTC-4. Okay. So now that 1 hour time frame, once again, it's clear to see that price is still respecting this initial area. So we're going to look to keep on playing price forward here. And once again, paying attention to the volumetric info, we see that there is 20% volume share at this oil block. And not only that, there is massive bullish pressure to bearish pressure within the zone. So I'm definitely looking for price to go higher from here, okay? Once again, guys, you want to just guess what zone price will play off. You want to have exact criteria to understand you are looking at this zone, what I'm looking at, because there's data and volume behind it, okay? Now we're going to go down to our 5-minute time frame to get our entry, which is the last step here. So what do we see on our 5-minute time frame, okay? Now this is the most important time frame to me, because this is when I'm looking at my entries, okay? And this is usually the harder part for a lot of traders, because here's where hesitation comes in. They're wondering, what zone should I enter at? should I FOMO in because price is leaving up? You know, all the different emotions do come into play, okay? But I'm giving you guys the skill to minimize that, okay? So first, let's look at our macro. That did one range type, price came, range type where then got a reverse, okay? These are certain days and variation where this does happen, okay? So look out for that. But the ones I've told you today in this video, that's what you're going to be mainly experiencing. But now as we inch in towards New York session, which is my current session, I'm looking at 9 o'clock. So where's 9 o'clock over here? Right there. Now what happens just before 9 o'clock? We have this 10-minute gap, which is 8:50, which starts off our first macro of that session. And then 9:10, which starts off the second part of that session, okay? Once again, all of this makes up my first New York macro. Now what we use this as our cumulative / range types. And once again, guys, if you still do not get full clarity in this video, you do get access to book a free coaching call with us. So take advantage of that if you're looking to understand this a lot more. So once again, price is now swept out our range type macro. So we know that this is our drawn liquidity. So now what about entry? So you can see that we're also starting with our second macro, which is usually the distributive one. So we want to ideally be finding our entries within this time frame. This would be the best time for our entry. So now as I'm looking at this, I'm going to lastly just get my volume. So as you can see, there is much more bullish volume than bearish volume currently. So I'm well in, beautifully high probable setup. Okay. I'm looking to enter this position now. Once again, guys, this is the Flux price action toolkit that is also within our description. So this is the zone I'm going to be looking to enter at. So letting price fall back to us here, stops just below that low point. And then we're going to be targeting, for one, we can target our macro range, or we can target our CRT range. So just because you have these two confidence overlapping one another, we want to use that to our advantage. So we're going to let price play out here. Once again, you can see that second macro there taps us in. So this is where we're entering at, stops just at that high there. And then this is our stop loss once again. And now we just let price play out. You can see that we're starting with the third macro. This might also be a possible re-entry for us or possible scale-in. So we want to just focus on this a bit more too. So we're starting, and once again, look at that. It starts at 11 o'clock. So we just ended with that macro there. So now guys, what do we notice? Exactly. Another macro sweep has been formed. So you can use this as a position to not only, if you weren't able to attend the first start of the macros, the first start of the New York session, you can still get in at 11 o'clock, which is 2 hours after the open. So now this also does give you a lot more in terms of risk ratio, stop loss still at the same low point, and then you are getting your second position here. So buy there, scaling in. I would only recommend this, as I said, if you're already with a buffer on any account you're trading on. But we're going to look for price to get to that range high. There you go, range high. You can see New York lunch starts off. You can expect the same thing. Price plays out there, goes towards the highs. And as you can see, overall, this was on a Friday, but we still had price play out here. So there you go, guys. That is our macro range theory. Brand new concept that I've been doing a lot of research into, and I'm just happy that I could share that with you guys today. Hopefully, you guys can implement it into your trading and it can improve it. And once again, if you want more clarity on this, book a free coaching call with us today. And please get access to our free checklist and course within the description. And I'll see you guys in the next video. And you guys can take advantage of the daily and 4-hour candle video to, once again, get more of your fundamentals down.